morning. It's great to have you here with us. You're watching First Mover, your first global look at today's action in Bitcoin, blockchain, and digital assets. I'm Jen Sanasi, along with my co-hosts Emily Parker, CoinDesk's Executive Director of Global Content, and the TIE's Director of Content, Lawrence Lewiton. Good morning to you both.
Good morning.
Morning. All right, let's see what's happening in the markets this morning. The CoinDesk Bitcoin price XBX index is currently at $29,953, briefly pushing above $30,000 in the last 24 hours. Now dipping just below.
$7 away, it's fine.
Yeah, we'll get back there, I'm sure. But Lawrence has some optimism. Let's take a look. Let's take a look at what's going on with Ether. The CoinDesk Ether price ETX index is at 1,907, back above $1,900. And let's see if DeFi is following suit. The DFX CoinDesk's DeFi index is at 123, down about 0.5%.
Our first guest digs deep into this Ripple decision, saying that the only thing that the Ripple's Labs SEC ruling guarantees is continued uncertainty in the crypto markets, an uncertainty that only Congress can correct. Joining us now to discuss is Brown Rudnick's Digital Commerce Group corporate partner, Preston Byrne. Hi, Preston. Good to have this perspective. So, okay, like on the surface, for those who aren't paying that much of attention, which is probably actually most of the world, but anyway, for those who are not paying that much attention to this case, it does look like there's some clarity here, right? It says, okay, so, institutional sales, okay, that broke securities, that violated securities law, but, programmatic sales or kind of, sales to retail investors, did not. So, I guess like on the surface, right, isn't that some sort of clarity or some sort of certainty? Why do you argue that this is just throwing things into further disarray?
Well, the problem isn't that the decision provides certainty for Ripple in this particular litigation, and it doesn't. I don't think it's an inferior court decision. From a district court. Inferior is not a pejorative. It's just referring to the fact that it's a first instance court. And it's in variance with the precedents that we've seen to date, or rather for the last 70 years about Howey. So I think the reason that there's uncertainty is because this court has now ruled rather differently than everyone expected it to, based on 70, 80 years of precedent after the Howey decision, which governs this area. So as a consequence, right, you can't really be sure where you stand in the United States. I think some issuers are going to make the decision to proceed where perhaps they shouldn't, and other companies that might wish to proceed if they had a better regulatory regime, for example, that in the United Kingdom or Europe, which provided a degree of certainty over the regulatory treatment of their tokens, may not. So, basically, entrepreneurs are going to be rolling the dice if they want to do business in the United States. I think more are going to decide to roll the dice after this decision, but they shouldn't have to roll the dice, right? Congress should just facilitate this activity by providing a certain regime.
Okay, so just to be clear, just to make sure we understand what you're arguing here. So you're arguing that the uncertainty stems from the fact, basically, that this was just sort of like one court decision, like just the way that the decision was made, not necessarily that the decision itself made by the court was unclear. Is that a correct assessment? Because it seems like the court was saying pretty clearly, they broke it down pretty clearly, but you're kind of more critical here of just like the process in which this decision was made, because another court could theoretically make a different deciation. Is that a correct summation?
The decision was clear. The question is whether the decision is right. It bears mentioning that Ripple lost. There were three limbs of the case, right? There were sales to institutional investors, there were sales via exchanges, so-called programmatic sales, and other distributions to employees for compensation. And so Ripple lost on the sales to institutional investors. That was found to be an investment contract under U.S. law, and therefore the sale of a security. The question then turns to why that is an investment contract, but these other distributions to investors via cryptocurrency exchanges to retail investors shouldn't be treated like investment contracts. And so the idea that you're going to have one set of transactions to sophisticated VCs, which is treated like an investment contract and in relation to which the buyers benefit from the full protection of the securities laws, and another set of transactions where you have employees and retail investors who are receiving these securities, but they don't get the full protection of the securities laws. Most people who practice securities law see that as being somewhat incompatible and inconsistent. The judge had her reasoning for doing that. In each case, basically, she examined the Howey rules. There are three limbs that need to be satisfied, and in the latter two cases, with the programmatic sales and the distributions to employees, she said that one of those legs was not present in each case. Whether you agree with her or not is a matter of quite spirited debate in the crypto lawyer Telegram channels. But the fact is, it is somewhat at variance with what everybody expected.
Of course, what does Congress have to do? And short of that, what can we expect from the Second Circuit? Because this, of course, will be appealed to the Second Circuit, most likely. We don't know who's going to do the appeal. Is it going to be the SEC or is it going to be Ripple? What can we expect out of the Second Circuit based on previous rulings, et cetera? And how does that change the game? Because, of course, as you mentioned, this was Southern District of New York. There are different districts would have different rulings had that been the case, but that's what we got. Now it goes to the Second Circuit. What can we expect out of that? And what should Congress do? We have a Congressman Torres coming up. What should he do? What should he push for?
Sure. So I'll start with the second question and then go back to the first. In terms of the Second Circuit, I don't think we should expect anything for a long time. Appeals take forever. In this instance, Ripple may decide to go to trial, and the SEC may decide to go to trial on certain outstanding issues which weren't resolved. That's chiefly the aider and abettor liability for Brad Garlinghouse and Chris Larson. Or they may just appeal the whole case, right? Both sides might appeal and decide it's worth their while, and the judge might approve it and might go up. But anyway, that's going to take time, at least probably a year. So in the meantime, we've got to ask ourselves, well, what's the situation? And that's the situation with uncertainty. In terms of what Congress needs to do, it's pretty clear that crypto isn't a security in the traditional sense, right? As a commercial matter, right? It might be regulated like a security. People might interact with it like they do with certain securities, but there are characteristics about the asset, right? The self-sovereign nature of it, the fact that it's custodied, by people on their own, the fact that people spend it in applications which provide useful software or useful services, such as Helium with Wi-Fi and things like that. So it's really not something which is in the nature of a security. We need a legal regime that recognizes that while also providing enhanced protections for investors, such as regulation of financial promotions and regulation of disclosures by issuers. So without necessarily taking crypto and then shoehorning it into a securities regime, which requires you to have a transfer agent, can only be sold or traded on an ATS. A broker-dealer has to be in the loop. And there are lockups and transfer restrictions. So basically, the existing securities regime is made for securities. It's not made for crypto. We need a regime which is made for crypto, which provides investor protections, not one which is made for equity or bonds and provides investor protections.
All right, Preston, we're going to have to leave it there. Thanks so much for joining the show this morning.
Thank you.
That was Brown Rudnick's Digital Commerce Group corporate partner, Preston Byrne.
The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
In a letter to SEC Chairman Gary Gensler, Congressman Ritchie Torres wrote, quote, "Regulation by enforcement had a dreadful day in court," referring to the summary judgment issued by Judge Annalisa Torres in the Ripple SEC case. Joining us now for more is New York Congressman Ritchie Torres. Welcome to the show, Congressman Torres.
Happy to be here.
All right. So you heard a little bit of our last interview here. You're really referencing what's happened in the Ripple SEC case as a landmark decision. Talk to us about why that's your position here.
Well, the decision in the Ripple case represents a rejection of regulation by enforcement. The decision makes two critical distinctions. First, it distinguishes between securities and an asset sold as part of an investment contract, which qualifies as securities. So the decision establishes what I've referred to as the Torres doctrine, based on the judge's name, which holds that digital assets are not in themselves securities, but can be part of investment contracts, which do qualify as securities under the Howey test. Second, makes a distinction between institutional buyers and retail buyers. So if you're an institutional buyer who purchases a crypto token directly from a promoter or an issuer in an initial coin offering, then that transaction qualifies as a security offering. But if you're a retail customer who's purchasing a crypto token on an exchange that typically is different from an investment contract and therefore falls outside the scope of federal securities law. And so therein lies the challenge. Federal securities law protects institutional investors, but fails to protect retail customers. And that's where the need for legislation comes into place. That underscores the fierce urgency around passing a market structure bill.
Have you received a response from the SEC?
No response from the SEC, and the SEC is typically unresponsive to Congress, particularly under Chair Gensler.
Congressman Torres, you're a straight shooter. You're somebody who always tells things the way you see it. Never one to shy away from controversy. So, got to ask you: do you think Chairman Gensler should maybe find another line of work?
Look, I'm not going to call on Chair Gensler to resign based on a policy disagreement. But if he decides to move on, I certainly won't be mourning his departure. So.
Got it. So, with that said, we talked earlier about with our previous guests about this issue with what Congress needs to do, that it would need to redefine perhaps what it would need to define, if you will, what crypto is, because Chair Gensler sees it as something that can easily fit into previous securities regulation, to how we test, et cetera. That's not a problem. It's a security for the most part, with the exception of a couple here. And this would require Congress to actually act. Do you see Congress doing anything in this session? We have an election coming up in 2024. It's almost around the corner, if you will. But what do you think? How fast can you get everyone in Congress together here?
Look, I'm confident that there will be bipartisan action in the House. Whether the Senate will act is an open question. But, I would submit to you that the combination of the Ripple case and a market structure bill would bring us to where we need to be. The Ripple case protects the crypto industry from arbitrary enforcement actions, and a market structure bill would protect retail customers from bona fide bad actors. And that's the combination that we need to enable the crypto industry to succeed.
Cynthia Lummis, a Republican, Kirsten Gillibrand, a fellow Democrat from New York, both in the Senate, both have a piece of legislation out. Do you think something like that could get passed in the House? And if so, if you had to put a time horizon on that, what would it be?
Well, within the House, we're considering two crypto bills by the end of the month. Stablecoin and market structure. Both of those bills are set to be markup by next week, and I predict that both will have bipartisan support. I suspect the stablecoin bill will have much broader bipartisan support than the market structure bill. But the market structure bill, the need for a market structure bill, has taken on a fierce urgency in light of the latest decision in the Southern District of New York.
So in one of your comments, you refer to Gary Gensler as politicizing the registration process. And I was wondering if you could sort of break down what that means, because I feel like that word is sort of thrown around a lot in reference to Gensler specifically. He's being political, he's politicizing. But what does that mean? Like, what is his political goal here? I'm just curious what you mean by that.
Well, it has multiple meanings, but here's one. A regulator like the SEC, which has immense power, should strive to be merit neutral. Right? The proper role of a regulator is not to decide the merits of blockchain technology. That judgment should be left to the market. The role of a regulator should be to protect investors and consumers. And in my opinion, what we've seen from Mr. Gensler is not regulation, it's the weaponization of the SEC against the crypto industry, which he considers useless and which he politically disfavors. And that, to me, is an abuse of power. That's a politicizing of the SEC, and the failure to create a workable registration process for crypto companies that are striving to be compliant. Again, that to me is an example of politicizing the agency.
And my other question is just about Congress and, this general sense that, regardless of how incremental or reasonable a proposal is, it just seems really hard to gain momentum in Congress, just given how many other things are going on, how hard it is to sort of gain consensus, how many different views there are. I mean, do you really think that there's just enough momentum in Congress to pass anything before the election, crypto related?
Look, I can only hope, especially if people understand the implications of the latest court decision. The Gensler strategy of litigation over legislation has backfired badly, and it's backfired at the expense of retail customers. We might be in a period of protracted litigation in which retail customers have no protection. And so the only means of protecting them is legislation, is a statutory framework for protecting retail customers in the digital assets marketplace. So I hope that the decision underscores the need for Congress to act and exposes the limits of regulation by enforcement and by litigation.
A story was published this morning that said, Congressman French Hill and Dusty Johnson criticized the SEC's approach to regulating crypto and suggested that the SEC's actions were timed to overshadow and undermine comprehensive legislation. What do you think of these remarks? Do you agree with these two?
I do agree with the criticism, and it does feel to me the actions of the SEC are often politically motivated. The decision, for example, to register Prometheum, which is a trading platform that trades no digital assets, struck me as strange. It seems to me that Prometheum exists purely to be a talking point, purely to create the false impression that there's a viable path to registration for crypto companies, when in fact we all know that's false.
So who in the Democratic Party and in the Democratic caucus there do you think has like-minded thoughts here on, we keep hearing about the Republicans' views on what Gensler should do and passing legislation. We don't hear enough from Democrats, or we don't hear from that many Democrats, you being a shining exception here. What other Democrats are there? And have you talked to Hakeem Jeffries about any of this?
Look, views vary widely on crypto among the members of the Financial Services Committee, and I would submit to you that the divide is not so much ideological as it is generational. I find that younger members, including younger Democrats, tend to be more open to the innovative potential of crypto and blockchain technology. But there are a number of Democrats, whether it be Josh Gottheimer or Wiley Nickel, who have an open mind and who understand the need for regulation. But I would leave it to others to characterize their own views.
Just to quickly follow up on it, I just want to bring up something that feels like ancient history in crypto, but really isn't, is that, Congress and many people in Congress received quite a lot of political donations from Sam Bankman-Fried. And there's been a lot of speculation that this has kind of dampened debate. This just left a really bad taste in people's mouths. In your view, is that something that's still lingering?
For me, the FTX Ponzi scheme underscores the need for legislation. The lesson learned from the collapse of FTX is that companies like FTX, deregulated, over-leveraged, offshore companies, carry the greatest risk of losing customer funds. And so Congress has a vested interest in filtering out those companies and punishing those companies.
Specifically political donations to members of Congress. I'm just curious if you think that in some way shaped maybe people's views or interest in, you would imagine that would just leave a very bad sentiment towards crypto to people who accepted those donations. And then this all happened and some people were trying to give them back. And I just wonder if you think that shaped the narrative in any way.
Well, the members of Congress who received those donations were not aware of his wrongdoing. So it just strikes me as unfair criticism. But people are going to hold whatever views they want of Congress. It should have no bearing on our obligation to create a framework for protecting investors. The status quo has failed retail customers, and we have to replace the status quo with a rigorous but workable framework for regulating digital assets and protecting retail customers.
All right. Well, Lauren Boebert versus MTG. Who wins?
Both of them are insufferable, but Lauren Boebert might be more insufferable. And apparently, Marjorie Taylor Greene is no longer sufficiently right-wing to be part of the Orwellian House Freedom Caucus.
You don't want to pick a winner on that.
Yeah, I think more highly of Gary Gensler than I do of the two of them.
I think that says something. All right, Congressman, we're going to have to leave it there. Thanks so much for joining us this morning.
Take care.
That was New York Congressman Ritchie Torres. CoinDesk reached out to the SEC and Prometheum for comment, but we haven't yet heard back. We're going to take a quick break. When we come back, we'll dive deep into the crypto markets.
Hey, look, Bitcoin's almost at $30,000. Well, joining us now to discuss further is president of crypto asset fund ProChain Capital, David Tawil. Welcome, David. How's casino? Is it fun this summer?
It's doing just fine, thank you.
All right, good to know. Good to know. A little Jersey Shore inside stuff there. Let's take a look at we have this Bitcoin ETF that was proposed by iShares. Now, you think that if it gets passed, the spot Bitcoin ETF gets passed, it will benefit Grayscale. Grayscale, for folks at home who might not know this, though you probably should, Grayscale owned by DCG, parent company of CoinDesk, who this happens to be on CoinDesk TV. So why do you think Grayscale will benefit? We saw a shrinking of their discount, but why do you think they'll benefit because of something that iShares will do?
It'll just be a quick knock-on effect. I mean, effectively, the Grayscale Bitcoin Trust, the GBTC, will go ahead and reach parity with the spot Bitcoin ETF, and the discount will absolutely collapse. It's narrowed a lot over the past couple of weeks since BlackRock filed its application. Larry Fink has made a couple of very important sound bites on television. And so we're now seeing a lot of momentum for the ETF, and it's been Grayscale's explicit mission to go ahead and convert the GBTC into an ETF as well.
Now, and you have an investment in Grayscale, the Grayscale GBTC, correct?
We do. We own some of it. We've been long it for a while on the theory that eventually that ETF push would be successful.
Okay, I got to ask you about MicroStrategy now. That's always a concept for me. It's a tough one. It's a tough sell to me because MicroStrategy was worth about $1 billion prior to its acquisition of Bitcoin. It's now down to the value solely of its Bitcoin, maybe a couple of bucks here and there. Why do you think this is worth it? 152,000 Bitcoin in their portfolio, $4.5 billion in value. This is a company that really, quite frankly, all they did was nothing related to crypto. Yet, and they had a valuation of $1 billion. Seems to have been eaten away, wiped out. Why is that? Why is it down to? Why are we discounting the value of the company itself? What does it say about what we think about management, et cetera?
So I think that our fund certainly owns spot Bitcoin as well. But I think MicroStrategy is actually a good investment at this point because, like you said, the market is valuing it simply for the ownership of its Bitcoin. Michael Saylor is a sharp fellow and certainly understands that a Bitcoin spot ETF will eventually come. And so therefore, if MicroStrategy's only business is just accumulating Bitcoin, it will necessarily no longer have a place in the market, or it will simply be a commodity amongst many other entities that have a much lower overhead and have no other, costs and expenses. So he certainly there is thought in MicroStrategy's front office about what's to do next. And I believe that Saylor and company will come up with additional activity beyond just the Bitcoin holdings, purposes of increasing the value of the enterprise.
Emily.
Oh, sorry, we lost Jen for a second. Okay, sorry. Yeah, so here's just a question that, I know it's kind of hard to answer, but why don't you just throw out a guess here? If these, spot Bitcoin ETFs, or if any of them actually goes through, how high do you think Bitcoin could actually go?
I've said, and I'll continue to say, I think we could get to 50,000 before the end of the year. And I know that's a lofty number. But frankly, it's just retracing.
Wait, I'm sorry, just to clarify, do you mean if the spot ETF goes through or just by the end of the year, even if it doesn't go through?
Even if it doesn't go through. And certainly if it does go through, I think there's considerable momentum. I think the way I see it at this point is that we've seen the series of unfortunate events fully unfold, right? The only remaining kind of event is really the full unraveling of Binance. But beyond that, we've seen everything else that could possibly go wrong in the sector go wrong. And now there is, first of all, I think we've, in terms of pricing, we've established a floor. Certainly 31,000, 32,000 seems to be an upper threshold that we need to break in order to go ahead and gap higher. I really believe there is more going on here with BlackRock than what meets the eye. And my reason for saying that, this is not a conspiracy type theory, but the adding of the CEO of Saudi Aramco to the board of BlackRock, to me, is very important. Not as it relates directly to Bitcoin, but in terms of what BlackRock is focused on and doing. The decision to go ahead and put forth the ETF application for Bitcoin and the add of the Saudi Aramco CEO to the board were not without massive deliberation and very explicit strategy, planning. And the ETF application was not just thrown out there in terms of jump on the bandwagon. There is going to be, and we've seen the rhetoric since the initial application by Larry Fink, that he believes cryptocurrency is transformational, revolutionary. I forget what words he used. And BlackRock, as the largest asset manager in the world, does not throw around words like that on a daily basis. And therefore, I believe there is going to be a lot of positive headlines coming, a lot of machinations that may leak out into the public in terms of what BlackRock is doing, in terms of what competitors are doing as well, in order to go ahead and kind of keep up. And so, between that and then, the kind of the ire that has been spoken about previously on the show with respect to what the SEC has done and the lawsuits and maybe successes that will come forward over the next couple of months. And between those two things, I believe that we have the opportunity to really move higher. And if we don't go into a recession in the U.S., I think that technology will be preferred. And one of those areas of technology is going to be Bitcoin.
So, before you talked about things going up in smoke, speaking of things going up in smoke and also getting higher, ProChain, your company has an investment in Griffin Digital Mining. It's getting acquired by Akerna, which is a cannabis company. Now, this is a weird deal. You got to explain this, because why a bunch of pot smokers need to buy crypto miners is beyond me. And I mean, that's great. I mean, were they buzzed when this happened? Why can they afford crypto miners? Why can they afford a crypto miner when the price of Bitcoin's back up to 30? You would think that there would be a higher bid on crypto miners in general from the market. What makes it affordable? Or did they just smoke through their inventory and said, let's pay everything we can?
So no, let me clarify. This really is just an acquisition by a shell company. Akerna was previously a technology company focused on the cannabis sector. They have sold those assets. So now it's just a shell of a company that essentially Griffin's going to go ahead and reverse merge into. So it's not going to be a crypto / marijuana company. It's going to be a crypto miner and a hydropowered backed crypto miner at that. And we invested in Griffin, a couple of years ago at a very I'd say favorable valuation. And I agree with you in terms of where the stock price is on Akerna. Obviously, there's no guarantee that this transaction goes through. There have been other, previously announced transactions in the mining space in terms of going public that have not gone through. But it seems that the IPO market now is, generally open. I wouldn't say incredibly robust, but certainly generally open. Couple that with the fact that the gains on miners this year have been outstanding, almost eye-popping. I don't know if you've seen that. I don't have the graphic in front of me, but hundreds of percents that miners have gained. Granted, they've been incredibly low at the end of last year, but certainly outpaced the gains on the cryptocurrencies and even Bitcoin over the course of this year. So yes, the valuation should be robust for Griffin's public debut. Obviously, since we're investors, we are hoping for a very robust debut.
Well, from hydroponics to hydroelectric. Thank you very much, David. That was ProChain Capital President David Tawil. Stay tuned to CoinDesk TV. We'll be right back.
Thank you.
All right, that's it for First Mover. I'm Jen Sanasi. Thank you to my wonderful co-hosts, Emily Parker and Lawrence Lewitton. We will see you again here tomorrow. Guys, it's always such a pleasure.
Provided that the Canadian wildlife doesn't eat your connection to our wires. You know,
yeah, we never know what's going to happen up here.
There's a lot of strange animals running around Canada.
Strange but cute.
Yeah, delicious if you're in Quebec.
All right, Lawrence, we're going to leave it right there. First Mover returns tomorrow at 9 a.m. Eastern Time. In the meantime, you can catch The Hash at noon. You're watching CoinDesk TV.